Want to dig into another issue that we are watching here when it comes to uncertainties, particularly for those entering the economy right now. College grads obviously going through quite the year when we think about coming out into a rough job market, the roughest we've seen since the Great Recession. And for more on that and the subject of an NBER paper, I want to bring on Yahoo Finance's Ethan Wolff-Mann, who's been digging into that. And Ethan, obviously it's grads that come top of mind, but what are the overall lasting impacts when we see a big hit like this kind of last years down the road?
Well, so we've heard in the past about the scarring effects of what it means to graduate into a recession and a really tough labor market. And oftentimes it's been thought that those effects might last about 10 years, maybe into somebody's early 30s. But generally, in terms of wages, that seems to go away. However, this new study shows that this may not be the case. And some of these lasting scarring effects, maybe they're indefinitely into someone's 40s. And I think what's especially interesting here is that it does not also affect the people who graduate into the recession, but people afterwards. So people like us who didn't necessarily hit the labor market in 2008, but a few years later, these younger millennials also saw challenges and things didn't just get better. And so that's something that I think we have to think about right now. So if those effects are still happening now for millennials, we have another recession happening. We have another crisis that will have similar effects, but the other ones haven't yet abated. And so I think that this is something that is especially worrisome, and I think some of the future may hold an even more difficult thing when it comes to the other side of the you have revenue going down for millennials, but costs are also going up. Real estate and of course student loan debt is a problem that keeps ballooning. So really, on all sides.
You talk about the student loan issue there, and that is something. I mean, we can talk about millennials going and debating Gen Zers here for who's hardest hit. Millennials getting double dinged, as you note. But on the student debt front, we have seen that become an issue, even for even Gen Zers here who might be coming out, who would be graduating with a lot of student debt, also be unemployed. And we've seen some ramifications on that front here with the postponement of loans being paid back on that front. But is that enough when you think about the economic impacts, especially if they last as long as you're describing?
Well, so what's interesting here is that with the current crisis, one of the things that people used to do in past recessions, including the last one, is staying in school. College enrollments, according to this paper, spiked during the Great Recession. This is something, obviously, that may be more complicated this time. Schools are closed. There's remote learning. And really all of the in-school people are going to be compromised. Unlike the last time, school was sort of this haven from the recession. Now it's being hit just as hard, if not harder. So I think it could be worse.
Optimistic note to leave it there on. Ethan Wolff-Mann, appreciate you bringing us the update on that front.
Hey investors, Zack Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.